Hello and welcome to Business on the Wire. Even as a slew of bills are presented before Parliament and they are meeting protest amongst opposition parties, the bigger questions remain on ground. What's happening with economic recovery? What's happening with the unemployment figures? And what will it take for India to begin a recovery process from the deep slump it found itself in, as the first quarter GDP numbers indicated? Joining me to talk about all of that and the key reforms that he's looking at is Manish Sabharwal. He's chairman and co-founder of TeamLease. Thank you very much for joining in, Mr. Sabharwal. I want to start by alluding to an article you wrote recently, in which I found some of the words quite intriguing, where you wrote that COVID's economic pain is a passing shower, not climate change. The weather of the moment, which is the first quarter GDP contraction of 26%, has passed. And from here on, things will look only better. Which parts make you optimistic as we stand about the next few quarters, and which parts of the climate or the weather are you still worried about?
I mean, clearly FMCG is back to 100%. I mean, there's so many industries which are back to 100%, and there's so many industries which can't be done without social distancing. So I think that, of course, things will not be normal. I mean, my context of that statement is please don't extrapolate 26% GDP contraction to the year. I think that a leader is a dealer in hope, but hope is not a strategy. But I think that it's a little difficult for a modern economy to function with the uncertainty that we confront. But the notion that nothing good is going to come out of COVID may also be sort of premature. I don't think anybody knows when COVID will end. But I do think that there's a number of there's a structural window, there's a global window, and then there's a policy window which COVID is opening up. In the short run, all we can do is make sure that sort of disease doesn't lead to death, or unemployment doesn't lead to hunger, and liquidity problems don't lead to bankruptcy. So I think anything you can do by Friday is not important or impactful. So, everybody's trying to say, what can I do by Friday? I mean, I think that's a waste of time, because this is a global cataclysm. Sacrifices will be made. Banks will have to make sacrifices. Shareholders will have to make sacrifices. Employees will have to make sacrifices. And I think citizens will have to make sacrifices. The notion that we will get out of something like this without sacrifices. But my submission would be is that a new world of work, new world of organizations, and a new world of education is being born out of COVID, all three which play to India's favor. I think that the global trends of sort of a global glut of capital, where fixed income has become no income. In a world where fixed income becomes no income, you'll overvalue growth. And India is one of the few countries in the world with more than 300 million people where we have 20 years of growth ahead of us. That's because of our past sins, of course. But I would submit, in a world where there is a glut of capital, India is one of the few places where growth is left. I think China is making everybody in the world uncomfortable. And the way the US Federal Reserve and the US, the $3 trillion fiscal deficit is more than India's GDP this year. So besides a structural window of changes in the world of work organizations, there is a global factors in capital markets, China's factory refugees, and other things which make India more attractive. Now, I'm hoping, change is a form of hope. So I'm hoping that, as we have seen with the agricultural reform, as we've seen with the education reform, two reforms which I've been asking for years, these are bold reforms. You're finally starting to replicate some of the political courage which we saw in Article 370 in economics. I've always said that if you can do Article 370, you can do labor reform, right? I mean, there is no question about that. So I think that I am hoping that COVID's pain will force structural reform, and that will be India's opportunity.
It's interesting that you mentioned FMCG, though, Mr. Sabharwal, because in the recent couple of days, Sanjeev Mehta has gone on record to give a number of interviews where he's actually quite worried about the situation, urging the government to move, saying, now is the time to do it, because if you don't, the cost will be heavier. Also pointing out that the dynamics for FMCG have actually changed dramatically, especially in the urban space, where the urban poor are feeling the pain. The point I'm getting at is that we didn't enter COVID in a very strong state. We had 7 quarters of a recession on our back. Does it look as easy, the fact that we will regain growth, or does it look like a proven binary that we will recover from this and we will grow very well?
I think so. I think India is a 10 horsepower engine running on 2 horsepower. See, we're different from Latin America. Latin America is a 5 horsepower engine running at 4 horsepower. India's always operated below its potential because of the regulatory cholesterol in land, labor, and capital. Um, I think GST was short-term pain for long-term gain. I think 29 taxes to be replaced by one tax was always going to create short-term pain, but was always going to create more efficiency in the long run. So I guess my challenge with the fiscal deficit argument or the fiscal spend argument is we are already at 12 to 14% of fiscal deficit of GDP. I mean, I know Japan's at 21 and the US is at sort of 19, but I think for a country like ours, I mean, if we wanted more resources, we should have been outraged over the last 20 years or 40 years, right? We are 138th in per capita GDP and we're 5th in total GDP. We have often confused total GDP with size, but COVID reminds us that per capita GDP matters more. And so I would submit that even if the government wants, there is very limited room in fiscal and monetary policy. I mean, in monetary policy, what can you do? You can do three things. You can reduce interest rates, you can offer liquidity, and you can offer regulatory forbearance. I think RBI has done all three of them. There may be some more room, and they're keeping a track of everything. But on the fiscal front, there is a 3 lakh crore shortfall in GST. I mean, I know the 14% guarantee was given to states based on certain assumptions, but that's not panned out. It did pan out for 1 year. It was a gamble. So I think that hopefully the broadest shoulders will carry the heaviest burdens. But the notion that somehow the government is doing conjuicy or, that we should steal 10 lakh crores from our grandchildren and throw the money from helicopters, I don't think there's a huge multiplier effect of that. I think what we should do is banking reform, labor reform, education reform, agriculture reform, compliance reform. I think these are stuff that we've known for 10, 20 years that have been holding us back. I think the usually if you do a reform and nobody screams and shouts, that means that it's not usually very impactful. So the level of opposition to agricultural reform suggests that this is very impactful reform. I would submit that the new education policy, I don't agree with 15 years. It could be brought down. The Purna Swaraj for universities can be brought to 5 years. So I'm just in a different, from my vantage point, I don't think that the Indian welfare states lacks ambition. It just lacks resources. I mean, there's just, the math has to work. I mean, people can say, do whatever it takes, or the government should do this. I think the question we have to ask ourselves is, can the government do that? Should the government do that, right? I mean, we are facing a problem. We should make some sacrifices. We don't need to leave our kids with 10 lakh crores of debt, which went to consumption and actually didn't change India's growth rate. See, I have a fundamental problem in believing that India has a jobs problem. We have a wages problem. If you think India has a jobs problem, which means bhuka nanga pyasa, you'll throw money from helicopters, you'll mandate a 3-day work week. But I think everybody who wants a job has a job. So we have a wages problem, and that needs productivity. So COVID reminds us about pre-existing conditions, as you said, but I don't think those pre-existing conditions were 8 quarters. I think those pre-existing conditions were 72 years.
I'm going to touch upon the point you made about the labor and farm reforms in a bit, but I want to sort of drill in on the point you made about employment, saying everybody who wants a job has a job. And I'll present to you 2 bits of data on that. One from CMI, where I'm not going to go into monthly data, but talk about the wave or the entire period from May to August, where they found that 12.2 million workers, white-collar workers, lost their jobs, and second to that came the industrial workers. That's one piece of data. And the other, that current estimates point out the fact that India needs to add 90 million non-farm jobs in the next decade. We're basically talking about 12 million jobs per year. So where is it from, sir, that everyone who wants a job has one?
Because India's official unemployment rate has been between 6 and 9% since 1947. In fact, CMI's yesterday data says India's unemployment rate is 6.2%. My problem with the CMI data is 8 went to 28 and came back to 8 within 3 months, right?
On a
So we
monthly.
were 8 in March, 28 in. Well, so India's problem isn't jobs; it's employed poverty. See, employed poverty is a real problem. Don't get me wrong. Employed poverty is a problem that people have a job but don't make enough money to pull out of poverty. But that is a different problem than unemployment. What you need is more productive firms. What you need is more skilled people. What you need is more productive states. I live in Karnataka. My parents live in UP. Karnataka has one-fourth the number of people than UP, but has the same GDP. So people in Karnataka are 4 times more productive. I mean, I can give you my. So I would submit that even yesterday's CMI data, which suggests that unemployment is 6.2%. I don't think you agree with that as a indicator of prosperity. I mean, Western countries would kill for 6.2% unemployment. I mean, so I would submit unemployment may be the wrong metric in a country where our problem is 35% poverty. And this is not for the last few quarters or last few years, or it's for the last few decades that unemployment is between 6 and 9. So I would submit if we're between 6 and 9, then why is 35% of our population in poverty? So I think that a large part of this employment is built on self-exploitation. It's not built on self-employment, it's built on self-exploitation. So I think we have to step back from this noise to signal ratio in our unemployment data, which says that, look, everybody in India is unemployed. That's not true, and nor does CMI agree with that. So if CMI agrees that it's 6.2% as on September 20th, then what is the problem? Well, the problem is wages. And I would submit that I can explain why urbanization, formalization, financialization, skilling, and industrialization are the only way to raise wages. Because we have 63 million enterprises in India, 12 million don't have an office, 12 million work from home. Only 12 million are registered for GST, but 2 days ago the GSTN put out data. Only 70,000 out of the 12 million GSTN registrants have more than 5 crores in revenue. There are only 22,500 companies with a paid up capital of more than 10 crores. So I understand the weather of the moment is difficult, but these numbers are not the creation of GST or demonetization or the last 5 years. They are a creation of the 1955 Avadi resolution or the 1956 second five-year plan, which kneecapped competition, which kneecapped entrepreneurs. And in 1991 was a massive disruption to that status quo. But even today, our labor is handicapped without capital, and our capital is handicapped without labor. So I know that people want you to sort of talk about the weather of the moment as catastrophic. But from my labor market perch, where I have hired somebody every 5 minutes for the last 15 years, but only hired 5% of the kids who came to me for a job, this is not the creation of the last 15 minutes, 90 days, or 2 years. I mean, our labor is handicapped without capital, which is why we need labor reform. And our capital is handicapped without labor, which is why we need banking reform and compliance reform.
Some of this data is not the weather of the moment, though, Mr. Sabharwal. The unemployment figures have been quite poor for many quarters, and it's 6% as a headline rate, but within that, it's the urban youth, the ages between 17 to 21, where it's actually double-digit percentage unemployment. Be that as it may, on the point that you made about labor reform, again, there has been severe criticism on the fact that it is quite anti-worker, whether it is in terms of the safety protocol that is provided to them. Now there are some changes in terms of actually providing a letter of agreement or a letter of employment to any company that employs earlier above 300, but now 100. Is enough thought going into equity while constructing some of these laws? Because the sense one gets is that many of them seem to be tilting towards the interest of only one party and not the other.
Oh, India's labor laws don't protect employers. They are not pro-labor, nor are they pro-worker. They are pro-labor inspector. I mean, you can't comply with 100% of India's labor laws without violating 10% of them. There are 17 definitions of wages, 19 definitions of workers, 21 definitions of an enterprise. So I think that labor law reform does not mean no labor laws, which is why I disagreed with what UP did during COVID. I think Dadabhai Naoroji is often described as being too moderate for the radicals and too radical for the moderates. I think that's really where the sweet spot for labor laws is. I don't think anybody is arguing that there should be a few non-negotiables. Those should be social security, those should be safety and working conditions, those should be leave. But 67,000 compliances, 6,700 filings, and 18,000 of those provisions having jail is probably not protecting our labor the way they want. So I think only a fool or a madman would set up a factory with 50,000 employees in a single location in India. So if you want to attract China factory refugees, we'll have to improve infrastructure. We'll have to do civil service reform because the instinct of the civil service is often wrong. But you'll have to start with labor laws. So I think that if you believe that the most important social security program is formal job creation. See, this is related to my earlier point. India doesn't have a jobs problem, we have a formal jobs problem. So formal jobs are the ones which pay higher wages. So if you want a formal job explosion in India, then I think we have no choice but to deal with labor laws. We can't have labor laws photocopied from countries with a per capita income of $50,000 with a country which has $2,500. And, for all the jealousy about Bangladesh, Bangladesh has no labor laws, pretty much. It has a single labor code. So I think that at some point we're going to have to let evidence, we have enough data now for many decades that labor law does not protect labor, because otherwise you wouldn't say 90 million people were sort of informally employed. So I think the dose makes the poison. Anything powerful enough to help has the power to hurt. It is about striking balance. And I think today the balance is, if an employment contract is marriage without divorce, you'll have very few marriages. So I mean, that's just the reality of life. So I think that today our Chapter 5B of the Industrial Disputes Act makes employment marriage without divorce, and I think that that will scare the hell out of an investor sitting in New York or in London or in China, because in India, all of us Indian entrepreneurs technically operate in the transmission losses between how the law is written, interpreted, practiced, and enforced.
Yeah.
Right? There is this, but an investor will look at the law how it is written. He doesn't understand how the law is interpreted, practiced, and enforced. So I think that at some point, the biggest gift which we could give our youth is a massive super cycle of non-farm formal job creation. Deng Xiaoping's genius, which he started off in 1978, was 350 million people being moved off farms. China going from 52 cities with more than 1 million people to 375 cities. India only has 52. China going from 50% credit to GDP ratio to 200% credit to GDP ratio. So I think that we have a lot not to learn from China. I don't think what China did can be replicated in a democracy, but we have to be a little careful when we say that today's labor laws protect labor. They protect the labor aristocracy. They protect the old at the expense of the young.
Let me swivel for a second to the banking space that you alluded to, the banking reforms. You're on the board as well. The data or the anecdotal data from there doesn't look good. ICRA points to the fact that bank deposits have actually worsened. There is, of course, the swelling NPA problem, which might hit us a couple of quarters down the line when the moratorium is lifted. What worries you the most, Mr. Sabharwal, about the banking space, and what key reform do you think might be the it reform, if there is one?
I mean, I think a swelling of bad loans is going to be a global phenomena, and RBI has indicated in the Financial Stability Report that we could go back to 12 to 14% NPAs. We had brought, 14, which was the peak of the last cycle, down to around 11 or 12 now. So it could be anywhere between 2 lakh to 4 lakh crore in new NPAs. I mean, there is no real way to handle this. We have to balance lenders and borrowers, right? Because moratoriums favor borrowers, but after some time, financial stability. So it's a very difficult balance between borrowers and lenders. But again, the credit to GDP ratio of 50% has made life for migrants and MSMEs difficult. I think it would, if we had 100% credit to GDP ratio and more financial inclusion. So again, I would say, we had only 97 banks in 1947. We have 94 banks today. We should have many more banks, and we should issue many more bank licenses. I think we need to fix private sector governance. I think we need to fix public sector governance. We have the mirror image problem, right? Private sector banks have strong management, so the board and shareholders are weak. In public sector, the shareholder is so strong that the boards and the management are weak. So I think they're two different problems, but both need to be solved, because otherwise you won't solve it. And particularly with nationalized banks, we have put in 2 lakh crores in new equity into nationalized banks in the last 2 years, and their risk-weighted assets are lower than 2 years ago. From my vantage point as a labor market entrepreneur, the budget of the Ministry of Skills is 3,000 crores. The central government allocation to primary education is 52,000 crores. So what is going on? You're putting 2 lakh crores into these stupid banks where Bhushan Steels has more loans than India's central government allocation to primary education. So I think we do have to deal with this issue, because there is a limited amount of money. If you put 2 lakh crores or 3 lakh crores into nationalized banks, you have 2 lakh, 3 lakh crores less to give education, skill development, and healthcare. So I think that we cannot do what we have done in the last few years by putting money into nationalized banks without fixing their governance and human capital. I think RBI has to raise its game in regulation and supervision, which we have already started. There has been a lot of introspection on what happened. And I think that we have to end the apartheid between banks and non-banks. So I think this is a 5-pronged sort of plan, and I think it is under implementation from anybody who watches closely, and I think we hope to stay the course with this plan.
When you say more banks, what is it that you're pointing towards? Because the government seems to have spent a large amount of time and a media circus actually bringing some of these banks together and bringing the number of public sector banks down. Equally, it looks like the shadow banks had just about come out gasping for air, but down they go again in this current COVID crisis. Do you mean spreading the reach of banking, or simply actually opening more physical banks?
I mean, it could be issuing more bank licenses. It could be moving small banks to the full bank status. It could be all kinds of things. I think competition is the 8th wonder of the world, right? And, if you take about 5 years ago, 5 years ago, nationalized banks were about 70% of deposits. Today, nationalized banks were 30% of incremental deposits and 30% of incremental loans in the last 5 years. So there already has been a privatization of market share, which we need to be careful about. Banks are not like BSNL or Air India. I mean, nationalized banks have 89 lakh crores of deposits. So you have to be a little careful with them. So I think that the Atmanirbhar Bharat target of 4 entities in every public sector area is the right target for nationalized banks. 21 banks has been brought down to 11, which is 9. And I think the final destination should be 4, primarily from a human capital perspective. You can't find great chief executives. You can't find great board members for 21 banks. I think you may be able to do that for 4. So I think that increasing competition is not contradictory to increasing financial inclusion or improving financial stability. And I think India needs to pursue all 3. I mean, migrants and MSMEs would have had a better time in the lockdown if we had more financial inclusion. But obviously, 14 lakh crores in bad loans is forcing the reverse repo of banks to give us 6 lakh, 8 lakh crores every night. So I think that, it's a complex balancing act. I think RBI has done a wonderful job during the lockdown. There are no good choices here. Right? I mean, if we are choosing between bad and worse choices, that's what COVID is forcing everybody to do. So my sense is I have no doubts in my mind that while short term we can do some tweaking with interest rates, but the availability of credit is a bigger problem than the cost of credit in India. So the obsession with the MPC is important because it's brought us macroeconomic stability. But the availability of credit in India is a bigger problem than the cost of credit.
Many a banker would privately say, though, Mr. Sabharwal, that there's actually enough liquidity. I mean, banks and generally financial institutions are awash with liquidity because that's exactly what central banks are providing at this point. But they're functioning from a position of fear, which is that they don't want to get into the same situation that you pointed out to. So they're basically choosing to sit on their hands. In that sense, aside from bankruptcy or any kind of banking revision, do you not think more attention should have been paid to the IBC to bring the insolvency and bankruptcy code, to give it more teeth, to actually make sure that all these Bhushan deals don't happen, or that there is a better resolution for everyone to come out of it?
I mean, see, passing a new law like bankruptcy is not a bulb that goes on. It's a gentle sunrise. There were 5 constitutional challenges for the SR transition to ArcelorMittal to happen. I think if COVID had not happened, another 100 companies or 150 companies would have changed hands this year. I mean, COVID, the suspension of IBC, which may be controversial, but it has been suspended. So I think that we were just getting, see, any law you pass will have constitutional challenges. And SR was a clear example at which when we thought that the road would be clear. So my sense is whenever the IBC suspension is lifted, you will head back to the path that we had picked for banks. I think banks, IBC has restored the power balance between borrowers and lenders. And lenders needed, it was asymmetric for 10 years, which is why we had what we had. And so I think IBC can do with improvements. Everything can. I mean, when America wrote the Chapter 11, it amended it 460 times in the first 9 years. We've only amended it, about 7, 8 times. So I would be careful with healthy babies are not born adults, right? And so IBC is a remarkable disruption for banking. I think that today IVC is not a victim of crony capitalists or the empire strikes back, as some people believe. It is a victim of COVID. And I think when COVID goes away, I think there is a determination to get IBC back on track because when you allow bad loans, you don't put banks at risk, you put depositors at risk. I mean, most people tend to think that, banks don't lend money, depositors lend money. So I think that, there is a huge constituency in politics in India. I know that lately there have been a few books which suggest that, politics has impacted bank health. I think there's a huge constituency in India to protect depositors. So I would be careful with viewing the suspension of IBC because of COVID as a permanent recruit because the empire struck back.
Some of the sectors that felt the most pain, though, in that process were real estate for sure, construction, to a lesser degree now manufacturing is struggling. But these are the bulwarks of any sort of, large recovery, both in the economy and in employment, Mr. Sabharwal. What's your sense of what's happening there? And how long do you think it's going to take these behemoths to sort of get back on their feet?
Well, I think manufacturing is completely different from construction. Yeah. I mean, construction, we have mispriced land so early in our development, which is why I have a labor market problem, right? Because there's a kid in Gwalior who told me, give me 4,000 rupees in Gwalior, 7,000 rupees in Delhi, 11,000 rupees in Gurgaon, and 19,000 rupees in Bombay, right? My bags are packed, tell me where you want me to go. And so I'm not a big respecter of India's construction or real estate industry because real estate and construction shouldn't have 40% margins, which, in the past. And so I think the cleaning up of the real estate and construction industry, on the other side, it's a really important component of the farm to non-farm transition. But the way the industry had been conceived in the past was wrong. There was a birth defect in India's construction industry. It was built on regulatory arbitrage. I think that birth defect is now being overcome. So I think the cleansing of the construction industry, which has been happening since 5 years, has obviously been amplified by COVID. And it's hard for me to predict when that will come back. But I think manufacturing is only 11% of India's labor force, right? I think we also have to recognize that Make in India is becoming Make for India. If you look at the $64 billion of FDI, it's concentrated in areas where domestic consumption is getting to critical mass. So we'll never get to 25%, 30% of our labor force that China and the US are at. But I think we could add 50 to 100 million jobs. I mean, people view Atmanirbhar Bharat as sort of going back to license Raj or protectionism. It is just an experiment with small tweaks to supply chains for domestic consumptions. You're able to shift manufacturing. We've seen that happen in cars. We've seen that happen in mobile phones. I think we're starting to see that happen in white goods. So while I'm not I hope we don't go back to the license Raj and tariffs. I don't think we're going to do that. But I do think that there has been a realization that, making India a more fertile habitat for entrepreneurship doesn't mean importing all our goods and sort of surrendering that India will never have factories. We are not like smaller countries. We have the critical domestic mass which could attract investors. So I think that manufacturing will go from 11% to 18% of the labor force over time. But construction is hard to say because I think the cleansing process is not over yet.
Atmanirbhar has been sort of a product of what's happened in the recent political climate as well, in terms of our relations with China. But it's not like this context or this narrative wasn't present, because the Make in India campaign has existed for many years. What's going wrong in this entire set, Mr. Sabharwal? Because you hear so much talk about encouraging Indian entrepreneurs, Indian entrepreneurship, but if you actually look at the pyramid, there's a bunch of very large companies and there's a bunch of very small companies. What India has is a big hole in terms of middle-sized companies that can aspire for more.
I mean, that missing middle has been around since independence, right? I don't think it was God's will that it should take 72 years for 1.3 billion Indians to cross the GDP of 66 million Britishers, right? Why did that happen? That was because of the regulatory cholesterol. That was because of a banking system. So I would come back to say that if you did the compliance reforms, if you took an axe through 67,000 compliances, if you raised our credit to GDP ratio to 100%, if you raised our cities, we took from 52 cities, we went to 300 million, 375 or 350 cities. If we sort of fixed our school system, I mean, I don't think that the next 25 years in India will be very different from the last 25 years. I am quite clear. Our only thing I have to say is our choices should reflect our hopes rather than our fears. That has been one challenge in the recent past, that our choices are reflecting our fears rather than our hopes. I think that, as Dumbledore tells Harry Potter in Chamber of Secrets, it is our choices more than our abilities that reveal what we really are. And India has made some pretty crappy economic choices since independence. I think we have started fixing those bad choices. I mean, 1991 was remarkable. And from 1991 till now, we have done. But we made 3-4 mistakes in 91. We didn't include banking. We didn't include education. We didn't include formalization. And I don't think we adequately addressed the state versus center question, right? I think 29 chief ministers matter more for job creation than one prime minister. Yeah. I think actually 100 mayors matter more than 29 chief ministers, but we don't have mayors. But we've always taken the two extreme views, right? Indira Gandhi used to say in 15 of her speeches that strong states lead to a weak nation. N.T. Ramarao used to say the central government is a conceptual myth. India is run by its chief ministers. So again, we have to sort of figure out, because China's genius wasn't some Ayatollah in Beijing issuing fatwas. It was 200 mayors competing for investment. So I think as a consequence of the GST Council, and I think as a consequence of this GST crisis, we will also, and as a consequence of COVID, because healthcare and education is completely run by chief ministers, I think the acceleration of funds, functions, and functionaries will be a huge consequence of COVID and the GST crisis, where we will send funds, functions, and functionaries. We do not need 250 people in Delhi with the rank of Secretary to Government of India. I know you live there, but I mean, we don't need 250 people. We don't need 52 ministries in Delhi. Japan only has 9 cabinet members. US has 14. UK only has 22. So I think ease of doing business is now also dependent on civil service reform. Ease of doing business is dependent on decentralizing India from Delhi. And I think the COVID crisis really forces us to do that more than anything else. And if the education and agriculture will hopefully be followed up with labor and can be followed up with compliance and banking, I have no doubt in my mind that our 2,500 could catch up with China's $10,000 per capita income. Um, I mean, we had the same per capita income as China as recently as 1995. I mean, we had the same per capita income as Korea in 1960. That's a long time ago, but Korea is now 20 times us, but China is only 4 times us. So I would be, if we do the kind of structural reform and we replicate education with agriculture, with labor reform, I think that this sort of noise that you hear today about, well, the fiscal is not doing enough or monetary policy is not doing enough. Fiscal and monetary policy is not doing enough because the short-term behavior would compromise your long-term sustainability. Jonas Salks, the inventor of the polio vaccine, used to say the most important question to ask yourself is, are you being a good ancestor? And I think we would be bad ancestors if we stole 10 lakh crores from our grandchildren and wasted it on consumption rather than doing the structural reform, which would attract billions of dollars in a world that is awash with capital. So there's a TINA around the world in capital markets. And there's the FOMO, which is the fear of missing out on India, as you saw with what happened with Reliance and other things. I think TINA plus FOMO is India's opportunity.
Mm. One final question then, Mr. Sabharwal. On whose shoulders do you think the onus of this reform lies? The government has clearly put its hands up saying, look, we can't spend any more and we can't pump that much into public spend either. Corporate India seems to have been left wanting in terms of actually stepping up and delivering. Any corporate tax cut was not met with any sort of investment into capital expansion or any such thing. It basically was just a drawdown to the P&L. Who should we look to for this remarkable reform to happen? Who do you think will fire the first shot?
I mean, it's interesting that when you said government is not spending and therefore not doing reform, I don't think spending is reform, first of all. I mean, I think that spending is spending, right?
Such as public health. There hasn't been any additional spend in that regard, no.
Yeah. So I would submit that anybody who's read the new education policy will recognize that everything in there was in the Kothari Committee report of 1968 or the Radhakrishnan report of 1948, but did not get implemented, moving to a more including vocational training in this mainstreaming it. Gandhiji in 1943 in an education conference in Wardha had talked about Nai Talim, which never got adopted in India, and we developed the caste system. So I think the new education policy is revolutionary if it gets implemented, which has already begun. I think these agricultural reform, only 6% of Indian farmers get minimum support prices. Only 10% of India's food is processed. We only have, so I think that 45% of our labor force works in agriculture and it only generates 14% of GDP. So I think this is important agricultural reform. It's probably Purna Swaraj for agriculture for the first time in my mind, right? Now, we do need Purna Swaraj, we do need banks, we do need compliance reform. And I think labor reform, if the three labor codes or the 4 labor codes which have been introduced this week get passed, I don't think it's the labor reform I wanted, but I think it's a huge improvement over what we had. And I think it will catch people's attention. So I think that, the notion that India is trying hard is quite clear among international investors. I mean, we will go from $70 billion money coming in every year to 100 billion. So I would be careful with, for some reason, foreigners are more optimistic about India than Indians right now. I mean, maybe that's always true, but I think that it's what we care about is that in a world where 25% of the world's bonds, about $19 trillion, where fixed income has become no income, global capital markets will overvalue growth, which means that they will choose India. Now, we have to make ourselves worthy of that capital. And I think if you do a little bit of banking reform, a lot more compliance reform, a lot more labor reform, You will start attracting you will set off that super cycle of investment and consumption, which will raise our productivity. So I think COVID, it would be horrible for me to say that COVID is anything other than a tragedy, and that I've been waiting for something like COVID. But unfortunately, India doesn't change for a better option. She changes when you have no option, right?
Absolutely. It's been a pleasure speaking with you, Mr. Sabharwal. Thank you for gamely taking all my questions and counter questions on. Thank you for this conversation.
Take care.